Are you ready for the biggest tax cut in U.S. history? President Trump has now officially outlined his tax priorities as Congress moves toward passing a new bill. If this legislation is approved, it will represent the most significant tax reduction ever. Just take a look at this clip from his press secretary. Pushpin no taxes on tips, a major campaign promise from the president. Pushpin no taxes on Social Security benefits for seniors. Pushpin no taxes on overtime pay. Pushpin extension of Trump's 2017 middle-class tax cuts. Pushpin adjustments to the SALT cap to ease tax burdens. Pushpin ending special tax breaks for billionaire sports team owners. Pushpin closing the carried interest tax deduction loophole. Pushpin tax cuts for products made in America. Following this announcement, the White House shared the same summary on X. As a licensed CPA who has been closely following every update on Trump's tax policies, I want to explain exactly what's happening and, most importantly, how these tax cuts could benefit you. Tax priority number 1, no taxes on tips. Under current tax laws, tips are treated as taxable income, meaning workers must pay income tax, Social Security tax, and Medicare tax on their earnings. Trump's proposal aims to completely exempt tip income from taxation, which would benefit over 4 million tipped workers in the U.S., including bartenders, servers, drivers, and hospitality workers. From a taxation standpoint, the IRS has historically struggled to track and tax tip income, particularly because many tips are paid in cash and often go unreported. Instead of implementing stricter reporting regulations, Trump proposes to eliminate taxes on tips entirely. Tax priority number 2, no taxes on Social Security benefits. Currently, over 65 million Americans receive Social Security benefits, including retirees, disabled workers, and survivors. Under existing rules, these benefits become taxable once an individual earns over $25,000, single, or $32,000, married, filing jointly, leading to 50 to 85% of those benefits being taxed depending on total income. Trump's plan eliminates these taxes altogether, potentially saving millions of seniors thousands of dollars in taxes annually. Tax priority number 3, no taxes on overtime pay. More than 10 million Americans work overtime every week, yet these extra earnings are currently subject to regular income taxes just like standard wages. Trump's proposal would remove taxes on overtime pay entirely, making it more attractive for employees to work extra hours without worrying about increased tax burdens. This would also help businesses struggling with labor shortages by encouraging workers to take on additional shifts. With these potential changes, millions of hardworking Americans could keep more of their earnings while also making it easier for businesses to retain workers. These are just a few of the major tax policy changes being considered. Stay tuned for more details as Congress debates and finalizes this legislation. As businesses continue to seek workers, offering tax incentives could make hiring much easier. If Congress approves this legislation, millions of employees working overtime will be able to retain more of their earnings while paying less in taxes. Tax priority number 4. Extending the 2017 tax cuts. This is a critical issue. While many people are focused on new tax cuts, they may not realize that the current tax reductions are temporary and will expire at the end of 2025. Let's break this down, starting with income tax bracket reductions. Small Blue Diamond, the 15% tax bracket, was reduced to 12%. Small Blue Diamond, the 25% tax bracket, was lowered to 22%. Small Blue Diamond, the top tax bracket, was cut from 39.6% to 37%. If Congress does not take action, these tax rates will revert to their previous levels. Another major tax provision at risk is the standard deduction increase. In 2017, this deduction was more than doubled, leading to lower tax liabilities for millions of Americans. Currently, in 2025, the standard deduction stands at $15,000 for single filers and $30,000 for married couples filing jointly. If this provision expires, the deduction could be cut in half, increasing taxes for many households. Business owners have also benefited from a 20% QBI, qualified business income deduction, which allows qualifying self-employed individuals and small business owners to deduct 20% of their business income. For example, a business earning $100,000 will be able to write off $20,000, leaving $80,000 subject to taxation. This deduction is also set to expire at the end of 2025. Other tax provisions of great interest include bonus depreciation. This rule has allowed investors to deduct up to 100% of certain business-related purchases, such as real estate, equipment, vehicles, and machinery. However, this benefit began phasing out in 2023 and will be completely eliminated by the end of 2026. Many business owners are hoping for an extension. Tax priority number 5, adjusting the SALT cap. The state and local tax, SALT, deduction has been a major political battleground, even among Republicans. Let's simplify it. Before 2017, taxpayers could fully deduct their state and local property taxes, sales taxes, and local income taxes. However, the 2017 tax reform capped this deduction at $10,000, which particularly impacted residents of high-tax states like New York, New Jersey, and California. For example, if someone previously deducted $30,000 in state and local taxes, they could now only deduct $10,000, effectively losing a $20,000 tax write-off. This change caused frustration among taxpayers who had long relied on these deductions. Trump is now looking to adjust this SALT cap, but the exact changes remain uncertain. Some proposals suggest raising the cap to $20,000, while others advocate for eliminating the cap altogether. Tax priority number 6, cutting taxes for made-in-America products. Trump's 2017 tax reform reduced the corporate tax rate from 37% to 21%, a permanent cut that remains in place. However, Trump now wants to go further, introducing new tax cuts for U.S.-based manufacturers. Small blue diamond companies that produce goods in America could see their tax rates drop to 15%. Small blue diamond other businesses could still receive a slight tax cut to 20%. This aligns with Trump's broader economic strategy of boosting domestic production while discouraging reliance on foreign imports. Tax priority number 7, closing the carried interest loophole. This change would directly impact private equity firms, hedge funds, and venture capital groups. Currently, these firms benefit from the carried interest loophole, which allows them to pay lower tax rates on their profits. Small blue diamond profits from these funds are taxed at long-term capital gains rates, 20%, rather than the ordinary income tax rate, 37%. Trump intends to eliminate this loophole, ensuring that carried interest is taxed as regular income, closing a major tax advantage for wealthy investors. Tax priority number 8, ending tax breaks for billionaire-owned sports teams. Billionaire sports team owners have been leveraging tax loopholes to dramatically reduce their tax bills by writing off intangible assets like player contracts, media deals, and franchise goodwill, something most business owners cannot do. For instance, Steve Ballmer, owner of the Los Angeles Clippers, has an effective tax rate of just 11.6%, while NBA players like LeBron James pay 35 to 40%. Trump wants to close this loophole, though the exact method remains unclear. This reform would likely limit the deductions available to sports team owners, ensuring a fairer tax system. What's next? With Republican control of Congress and the White House, the chances of major tax cuts being passed this year are high. However, the final details and timeline remain uncertain as lawmakers negotiate the specifics of the budget and tax legislation. If you want to stay updated on these potential tax cuts and how they will affect you, make sure to subscribe and turn on notifications bell